Hi, this is Randy Finney with the right side of the chart, and this is a closing market wrap for Wednesday, May 15th, 2019. We'll keep this one pretty quick. So far, the levels are playing out pretty well on the technicals here. If you recall, on Monday, was it? Yes, Monday we hit that 178 support on QQQ. Pretty decent support level, as you can see, going back for a while, and bounced yesterday. And as I often say, support is support until unless taken out. So I was, based on that and some other things, as I said yesterday, I was leaning towards more upside today, and that's certainly what we got. So let's see what happened at the close. Printed a big green candle, but you can see we closed right about that 182.83-ish level. And again, these are ish. You got a low of 178.06 the other day, was it? And right now, you had a strong upside day, and it's not uncommon. Like I say, I use the term momentum fueled overshoot. We carried through that level a little intraday, but then closed, within mere basis points of it, in percentage terms. So, so for all intents and purposes, that's a kickback to resistance. We'll get to my 60-minute charts in a second. That was also where one of my bounce targets I have a range of bounce targets, and that was right at one of them on QQQ. We'll get to that in just a second. So again, if there's more downside to the market, which I suspect there is, remember, nothing goes straight down. You get kickback rallies along the way in the larger trends, and so far we were quite oversold. And this is the first decent kickback rally that we've had off the highs. So again, not to be unexpected at all, especially when you fall to support, oversold. There's your bounce, and where we go from here, that'll be important. Now I can see, we'll get to the 60-minute charts in 1 second. Let me just hit on SPY while we're out on the daily time frame here. Similar story. You have that key 281-ish level on SPY, which capped all the advances back there in the fourth quarter rally, and again we danced across it, or danced on it for a couple months here. On numerous occasions, you see some daily candles go through it, but none of those were weekly closing candles. Every week we closed back down on or below it until we finally broke away, gapped up there, and then printed a weekly close. So it's still, in my opinion, a significant level, and that's where we fell to on SPY. So you have so far just the initial reaction, or a reaction I should say, off the initial tag of that level. So where did SPY bounce to? Right to this the bottom of this resistance zone here on the daily chart. That first line I had at 285.18, and we closed at 285.15. So close enough for government work. That's a print right back, a bounce right back to the lower end of that resistance zone, with the upper end there. Here, I'll turn the levels on for you. The 286.71 right there. So we'll see how this continues tomorrow. Longer term, everything that's happened recently tells me that we still have more downside to come in this market. So I viewed today as an objective level to continue to scale back into short positions that were covered for the last few days there, which is what I did. And in fact, I closed out some of the longs that I had taken to come into the day with. All right, so let's look at one more thing here. And that would be the falling price channel right here. You recall I have these downtrend lines, two downtrend lines, parallel downtrend lines. That gives you a price channel. So we did break out of there, and I'm going to point out, so what my job is, point out bullish and bearish developments. Let you guys make your mind up where things might go from here, how you want to position. So that's a breakout. It is a minor downtrend line. It hasn't been in play very long, so it's not nearly as significant as the uptrend line we had off the lows from December 24th. But it's worth noting, and we've zoomed down to the 60-minute chart. There's the same price channel right there. And remember, we had a divergent low on the RSI, not PPO divergence. During major trends, which I think this is just the earlier stage of a larger correction, possibly much more, I like to see divergence on both the PPO and RSI. It's not a hard requirement, but it really helps to identify when you're going to get a swing tradable bounce, a bounce you can position for several weeks or more instead of just a couple days. Right now you have RSI divergence that could do the trick, and it's certainly been the catalyst for this little bit of a lift here. But if you can play around with these trend lines, we can come in right now, for example, which I just did here, come in real tight on all the candles here on the 60-minute chart, and now you can see we basically closed right on it. As I say, the charts are dynamic, and so is my analysis. And I'll change trend lines, support, resistance levels as the technicals change. So let's watch that now. If you recall, I had the purple lines were my bounce target levels. This used to be the yellow line as of heading in. Last week I had these two levels here, and that's the one we hit. If you recall, I go over this stuff because some people might be coming in new and didn't catch the last few videos. So we had that bounce last week, failed at the lower of the two bounce targets I had an impulsive move down, and so now as of today we've come up to and just taken out by a little bit the lower bounce target for this move up off this low right here. So like I said, there's more upside if the market wants to do that. I don't want to see it go much above this 289-ish level to keep the bearish case and alive and healthy. Doesn't mean it's all of a sudden we take that level out, everything goes from intermediate term bearish to bullish. But it certainly puts a damper in the bearish case. As of now, that's sort of continues to be the range right here. Let's just box it in for you. Where that's not my box tool. Here we go, box tool, right about there. That's where I see this this counter trend rally failing anywhere from possibly where we closed today. I'm going to get to QQQ in a second, which hit right up on a target, and let's do that now. Okay, here's the QQQ 60-minute chart, and yesterday I had added these bounce targets here. Anywhere minimum target, what is that, 181.13 or so, up to 182.76, and the final uppermost bounce target 185.53, and this trend line also is colored purple. So as I said, this one really is what I said last week or yesterday. This comes in right around the uptrend line. They're really so close, and that's what we did. We hit made a perfect back test of the trend line, and when you back test the trend line from below, that's resistance. So we may get rejected here tomorrow. If we do take it out, again, at this point I have even less convictions on where we go tomorrow. I'll get to a couple things in a second. I could easily see more upside. It's almost coin toss odds, so I just continue to scale into shorts here in the swing accounts, the longer term accounts, and keeping it pretty light in the trading account. We'll see what happens tomorrow. But I do maintain, or believe that this will most likely, this range here between the purple lines will contain the bounce. So let's put it in percentage terms from the highs today. I'm just catching right next to that, moving up, measuring. That's about 1% more upside in QQQ if we're going to hit that target in reverse. Again, and I think I made mention, there's a level 2, and these were the previous bounce targets as well. If we start going through those, that's just going to open the door to new highs, especially if we take out that 188.67-ish level. We'll be not too far off the highs. So as of now, that's what I'm looking at. One thing to mention here, PPO is still well below the 0 line. That's a pretty decent trend indicator, especially the 9 EMA, the signal line, which is the white dotted line. In that 0 line, the dash line right here, often acts as support or resistance during clear trends. When you're kind of whippy, sometimes you get some whipsaw signals, but let's watch for that. If we get a rejection tomorrow, or even if we pop up, there's still a good shot that we can roll over here at the 0 line, keep the trend bearish. So there's those are just levels to watch on QQQ. By the way, this trend line right here that we're back testing now, let's take this chart out a little farther. That's where it comes off. It's not the primary trend line. The yellow is the primary trend line that was broken. So that's, to me, that's the bigger picture, and that's what tells me there's likely more downside. These were well-defined uptrend lines off the lows. Where they broke down, we had impulsive selling. So I'm sure there's some out there that says everything that's happened over the last few weeks is solely due to what's going on with the trade wars. All right, and that's your stance. I believe that the technicals and the news, the fundamentals, they go hand in hand, and sometimes it takes a fundamental catalyst to break down, or reverse the market trend, whether it's bullish or bearish. Reversal, in this case, bearish. But the charts are what they are, and I've gone over the weekly charts quite a bit lately. I'm not going to do that today. I just wanted to focus on these near-term levels. Okay, quick look at the futures. This is ES, the S&P 500 E-mini futures contract. And you have this, remember we have had this downtrend line, sort of a broadening wedge pattern, a descending broadening wedge pattern, if you will, that we've been walking our way down so far. And I added another, here's a minor trend line too that may come into play, and that would align with, if you recall, when we were on the S&P or SPY 60-minute chart a minute ago, I moved that trend line out, the price channel, and now you can see it here. So again, this line here and this line gives you a price channel to watch. So that's the SPY at, or ES at resistance. If it can pop above it, the next resistance here, at least for downtrend lines, we have a downtrend line off the high, and that's again the top of that broadening wedge pattern that I've been highlighting. So, and that would, I'm sure, come into play with the those targets I just showed you on SPY earlier. And while we're here, I do see resistance. I'll add that level right here for you ES traders, right about here. Pretty good resistance. Let's tighten it up a little bit so you can see those levels. Let's grab this tool here. You can see we danced around it here, had a reaction right there low. We bounced off it, and it capped the advance right here, and it capped this advance as well. So, and that comes in right with that downtrend line. So let's just say as of now, that's my max bounce target here on the ES, 2892. Dual resistance levels coming in, I think a very objective level, and I can tell you this right now, if we get there tomorrow, this week, anytime soon, that's where I'll add back the last lots of short positions that I've covered recently in swing trading accounts for the next leg down, with stops somewhat above, probably a little bit above that 2917.50. That's a pretty key level as well. If they pop that, they're probably going to run it at new highs, especially if it's a sustained and impulsive breakout, not just a brief pop. All right, so that's ES. Let's look at NQ. NQ are the Nasdaq 100 E-mini futures. Here's your downtrend line off the lows on December 24th. Let's tighten this chart up a little bit. Look at the recent price action. And so I'll have to pull this in nice and tight, but there we go. We have that downtrend line. Sometimes it's hard to move those trend lines. They try to, there we go. There it is. All right, that's the downtrend line off the highs, 75.42 or 43. If you recall, that was my first target when we were up here and we broke down. I listed two targets at the time, initial swing targets, and that was 75.43ish, call it, and 72.75ish. You can see we hit that first one there. We had a couple reactions and danced on it for a while, gave it up, and then moved down to my second near-term swing target, and so far it's just a bounce back to resistance. Remember, support once broken becomes resistance. So you have, although this trend line isn't super well defined, it's worth noting. I put the higher weighting into that 75.42ish, 43ish resistance level, which is essentially where we stopped today. So that's it. If we see this over in the overnight session in the futures, we fail here and move down, then we've pretty much reversed it at the lower end of my bounce targets. That's going to be very bearish. However, there's a room for some more upside, as I showed you on the QQQ and SPY charts a minute ago, but not much. Say about another 1%, and we should head back down. Otherwise, other things may be happening. Okay, and what gave the markets a big lift today? This is one which I was, one of the longs I had today is Alphabet. This was posted as a trade setup in the trading room yesterday. There's two stocks with really strong divergence. Only one of the five fangs. This is my favorite. Intel has some nice divergences, but I mentioned there's also a little more downside on the daily chart. So of the two, this is the one I like better. And you can see this was posted yesterday afternoon, about a little after 1 in the trading room, showing you nice, clean, bullish divergence. Alphabet also fell to support on the daily chart. You can see that, and here's support right here, that level. And let's take a look at what it did today. You can see the target. So this one, well, that was yesterday. So let's get to today's chart. You can see it was over 4%, and that's more than double, even triple some of the most of the other FANG stocks did today. So this stock alone accounted for a very large portion of the gains in QQQ today. And again, it was priced in the charts. You had by far the best looking chart here. You had that nice divergence. It's very oversold on the daily, and the divergence is playing out. So we overshot my first target a little, and if we're going to see any more upside tomorrow, then I would expect this one to just go on, continue up, pop, hit my this is my just final swing target. It could certainly go more than that. There's a big gap get above there, but I would put very good odds, even with the divergent low, that you get a reaction here. We're going to probably be reverse it to a short trade there when it hits that, what is that, 1200, right? Yeah, call it 1200. And even if it's going to go on to break, again, probably a reaction. So that's, again, in large part what helped lifted the Qs today. So we'll just have to see what happens tomorrow. And I'll leave it at this, that if we are going considerably lower in the markets, what it will do in a correction like this, if this was just indeed the first wave down, just as the charts start to look good and just as everybody thinks it's safe to get back into the water, that's when you start out with a bang to the downside. Maybe another gap down, maybe another big move down in the futures. I know it seems this market has been driven just by tweets and news headlines from DC on the trade wars, and maybe that's what sparks it, maybe not. But I can also tell you this is not a healthy market. Watching the Nasdaq and the S&P 500 have such violent price swings when every little blurb of information comes out on the trade wars, this market, there's something wrong under the hood, or you wouldn't see such volatility. And at the end of the day, forget about all these short-term zigs and zags. If you're a swing trader investor, here's the big picture. We broke down from those wedges, very extended rally, failed breakout in QQQ right here. And again, I'm just recapping for those that are new to my analysis. We broke out, took out that double top high from 2018 and failed it impulsively so far. So this is it. I'll keep it very simple. This is a battleground between bulls and bears. We are between pretty decent support, about 178 on QQQ, and we closed right at resistance. I gave you some minor resistance levels above, but I'm going to say this now. I would really prefer to see, it would be really a pretty bearish event if tonight the futures move down, the market, or whatever happens between now and tomorrow, if the markets close down and fade today's rally. That's a big green candle. I'm sure it put a lot of hopium back into the market. And if they fade that and then come on down here below 178, we'll probably have a pretty swift move down, I would think, down to I have sharper targets honed in on the 60-minute charts, and we have the official trade on QQQ, so I'm just going to leave that here and say that's a rough target right there, about 171 or so. All right, let's go ahead and wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.